In this episode, we're diving into one of the most talked about, debated, and volatile alternative assets, Bitcoin.
Whether you see it as digital gold, a hedge against inflation, or just speculative tech, Bitcoin is on the radar of every high-income investor that we talk to.
Today, we're breaking down Bitcoin through the lens of our Fast-Fire Investability Scale to help you understand where it fits in your portfolio. But before we get into Bitcoin specifically, let's zoom out. When most people talk about crypto, they're really talking about three categories. Number one, Bitcoin, which stands alone as the original cryptocurrency and a store of value. Number two, stablecoins, which are tied to fiat currencies like the dollar. And then number three, altcoins, which includes everything else like Ethereum to speculative tokens.
Today, we're focusing on Bitcoin because it has the most adoption and the longest track record.
Bitcoin's a decentralized digital currency, meaning no central authority like a government or bank controls it. What makes Bitcoin special is its scarcity. There will only ever be 21 million coins in existence. That number is determined by Bitcoin's programming. This programming limits how many new coins can be created and how fast they are released into circulation. This means Bitcoin can't be inflated the way paper currencies often are. This makes Bitcoin very attractive to people looking to protect their money from losing value over time. It's similar to gold in this way, but far easier to store and transfer.
Bitcoin runs on blockchain technology, which is essentially a type of digital ledger, like an online accounting book that's shared and maintained across a global network of computers. Every time someone makes a Bitcoin transaction, it's permanently recorded on a block that's added to a long chain of prior transactions. Everyone on the network can see these transactions, which creates full transparency. Because the ledger is decentralized in public, it can't be altered retroactively. No one can fake or delete records. It's like a secure, tamper-proof spreadsheet that lives everywhere at once. That's why people say it's trustless. You don't need to trust a person or institution because the technology guarantees honesty.
And it's incredibly portable. You can store millions of dollars worth of Bitcoin on a small hardware wallet or even memorize your access key. Try doing that with gold bars. This portability is part of why people call it digital gold. So let's look at Bitcoin using our Fast-Fire Investability Score, starting with return potential. Bitcoin has been one of the best performing assets over the last decade with massive upside. It's seen 100+% returns in some years. Of course, past performance isn't guaranteed, but the asymmetric upside earns it an A for return potential.
Next up is the risk profile. Here's the flip side. Bitcoin is extremely volatile. We've seen it drop 40% in a month. That's not for the faint of heart. It's also still a relatively new asset class. Regulation, adoption, and technology risks are real. We give it an F for risk.
And finally, accessibility. The good news, it's easy to buy. Anyone can invest in Bitcoin through apps like Coinbase, Cash App, or even PayPal. You can buy a fraction of Bitcoin and you don't need accreditation. So we give it an A for accessibility. Now let's walk through a quick example of what it's like to invest in Bitcoin. Let's say you decide to use a platform like Coinbase, which is one of the most popular and beginner-friendly crypto exchanges in the US. If you use our referral link at fastfirecapital.com/Coinbase, you'll even get a small Bitcoin bonus when you open up your account. That link is also in the description. So first you go to coinbase.com or download the Coinbase app. You create an account using your name, email, and a secure password. Then you verify your identity with a driver's license or passport. After that, you connect your bank account, just like linking it to PayPal or Venmo. Once that's done, you can transfer money in and buy Bitcoin with just a few taps. You don't have to buy a whole Bitcoin. You can start with $10, $50, whatever amount you're comfortable with. Let's say you invest $10,000 into Bitcoin. That investment might double in a year, or it could drop 50%. That's the level of volatility we're talking about.
But for a small allocation, say 1 to 5% of your portfolio, it could add growth without significantly increasing overall risk, especially if you believe in its long-term potential.
So Bitcoin might be a fit for you if, number one, you believe in decentralized finance or sound money. Number two, want exposure to high growth, speculative asset. Number three, you can stomach extreme volatility.
It's not ideal if you need liquidity soon, can't handle significant drops, or haven't done your homework on the tech.
Okay, to summarize, here's how Bitcoin scores. Return potential is an A, risk profile is an F, and accessibility is an A.
Okay, that covers our investability score for Bitcoin. If you want to compare Bitcoin to other alternative asset classes, download our full investability scorecard by going to fastfirecapital.com/guide.
And remember to like this video, subscribe, and join us next time as we explore other alternative investments that the ultra wealthy use to build and protect their wealth. See you soon.